I think national capitalism is a response to the breakdown of the world order. And so we're going to have to subsidize production and inflate and support debts, right? But in the long run, it cannot solve the problem. There are limits to national capitalism because we need our allies to produce too. And that means we need them to have healthy economies.
1, 2, 3, 4.
Hey there. Welcome to the New Rules with Alan Pence, where we help you navigate today's chaos with precision. Your host, Alan Pence, has 25 years of experience working in business and government, and he knows how the old rules have fallen apart. Each episode, we'll explore how to thrive in this new landscape by mastering the new rules while everyone else is still figuring them out. Let's dive in.
All right, we are back again. So what are we talking about today?
Well, there's a lot to talk about. I think most recently we thought we'd talk about national capitalism. Although, can I just make one little side note? Did you see in The Economist, they said that Spain was the top economy of 2024?
Yeah, I think we talked about that a couple of episodes ago. Yeah, Spain has been doing pretty well, actually. But I think that's largely driven by tourism, which you guys are water cannoning people to go away from.
That's right.
No, I think Spain's actually done pretty well. I mean, it's an example of a country that might, in the long term, be able to grow. It shows maybe a path for the European Union. But, I'd have to look a little bit more into it, too. I haven't spent a tremendous amount of time looking at energy policy or any of the things in Spain. I just know lots of tourists and lots of protesters. Right. And Hamon.
Yep. The pigs are doing good.
Oh, right. Portugal, Ireland, Greece.
They call it the pigs. Portugal, Ireland, Greece.
Yeah. Well, Ireland is propped up just by tax evasion from large multinationals in the United States. So that's Ireland.
I know. Isn't that great?
That's got to come. Well, so we talk about that in the piece. So national capitalism. Yeah, I heard this from Russell Napier, who's a Scottish economic historian who I love. I would suggest anybody go look at his talks. He runs a thing called the Library of Mistakes, and he just published an article in American Affairs called America, China, and the Death of the International Monetary Nonsystem, as he calls it, which isn't exactly...
So I read it.
That doesn't really roll off the tongue, does it?
No. So I read it, but I think you should give the Cliff Notes 101 for the layman, like exactly what Mr. Napier is saying about the non-system.
Yeah, I would say maybe go listen to the Hidden Forces podcast. He did it with Dimitri Kofinas. He did an interview, so it might be a little more accessible. Hear him talk about it. So the non-system is basically, he knew Paul Volcker, who was chair of the Fed here in the 80s, and the person who quashed inflation under Reagan, right? That we become famous. And he kind of talks about the system that emerged out of the 80s post kind of we had this Bretton Woods system, like when we went off the gold standard. He kind of said what emerged is kind of like a non-system because nobody would have designed this thing from the ground up the way it operates, and it doesn't kind of work for most of the players. So he really called it a non-system that just emerged and needs to be replaced by an actual system. So in the article, Russell's really talking about like what's bringing that system to an end or the non-system to an end and the need for a new one. And it's really, I think there's lots of explanations, right? But I think probably the two most important things that I put under this label of, well, to be honest, these two things are causing it, and then they're causing national capitalism to rise. So the two things that are driving the end of the non-system and the need to move to what I think will become national capitalism are, pretty large debts all across the world, basically, with maybe the exception of Germany. And at the same time, kind of the breakdown of the trading system that we've had, the economic and trade system we've had. So I've written a lot about both of these things, but I think both of them are being taken to an extreme at this point, or on the way to an extreme where the non-system has to break down and we have to replace it. So on the debt side, really what we're talking about is the US. Actually, most people think the US is like super indebted more than everybody else. If you really look at it, you look at it in a sensible way where you take private sector debt and government debt, corporate debt together. US is pretty middle of the pack. So you look at countries like China, I don't have the figure right here, but people say, oh, well, China doesn't have that much national debt. But most of the debt in China is hidden in all these they have a lot of like state finance lending institutions or local financing institutions that are like semi-private. And they were the ones that kind of loan for a lot of this real estate, and they're off the books of like the local government. But in fact, the local government or the national government's going to have to guarantee the debt there, right? So once you put all that together and the corporate debt and the national debt, China's way more indebted than the United States. I think they're up close to 400% of GDP or something like that, right? So you look at Japan, massive national debts, and they're up, 250% of GDP. We're at 120% of GDP. And I think what you'll see in the United States, and I think this is something that a lot of people get wrong, and I'm going to write about in the future, is it's actually better that the government hold the debts rather than the private sector, because the government has more ways of dealing with it, right? So what happened in, like, say, the 2000s is we had a lot of debt on the private sector books. So we became very indebted over that time, and, probably symbolized by the mortgage crisis that happened, right? So at that point, federal debt wasn't very high, and driven by the need, which we'll talk about in the trading system, we had to run deficits. Someone had to be in debt to keep the economy going because of the imbalances in the trade system that were emerging. I mean, they had been there since the 70s, but China really accelerated them. So the only response the United States had, or, a country like ours with an open capital account, free trade, is our choice was between very high unemployment or indebtedness. As long as we're going to keep the system, our choice, like with open capital accounts and with free trade, our choices were very high unemployment or someone needs to run a big deficit in the United States. And so in the 2000s, that was the private sector. Now that obviously, so we had to, because the large unemployment would have caused chaos, right? And would have forced us to change. To be honest, probably would have forced us to deal with China sooner than we did. So as a result, we had to move. So we built up this private sector debt. And there is just, there's just so much the private sector can take because they have hard constraints, right? They can't print their own money. They don't have the Federal Reserve that comes in and does, right? So as a result, we had this financial collapse, right? And then the governments, government plus Fed, they're all, put them all in the kind of national government camp, came in and had to bail out the system. And then after that, we had to start running deficits in the public sector because the same problem still existed. We had this imbalanced trade system with all these surplus exporters exporting their surplus production to the rest of the world. So the only way someone like China can keep exporting to the United States and not become uncompetitive over time as their currency appreciates, right? Because we buy a bunch of stuff from them, we trade our dollars for yuan, the yuan goes up in value, all of a sudden those TVs and stuff aren't as cheap, right? So then people start buying stuff made in the United States and then it balances, right? That's how it's supposed to work. But what China was doing is they import the TV, we send them the dollar, they take the dollar and they recycle it back to the United States and buy a financial asset, a treasury bond, or in the 2000s, they were buying mortgage-backed securities, which they still today to some extent. So that kept the yuan artificially low to the dollar, right? And so we have had the same exchange rate with China, with the yuan. I mean, it's fluctuated a little bit. Yeah, for a decade and a half. And it's we've been sending dollars to you by the truckload and plane load for 15 years. And somehow the exchange rate's still the same. I mean, what's up with that? That makes no sense, right? So we were allowing the system to get more and more distorted. China was getting bigger and bigger, more and more a share of the world economy. And so we're absorbing more and more of their excess production. And so as a result, we have to run deficits because the only other solution, if we go austerity and say, hey, we're not spending, and they're continuing to bid up our assets, then we have massive unemployment, right? Because our interest rates and financial assets inflate, right? So we were running this deficit system to keep our economy going while they're exporting their surplus, right? So what I disagree with many budget hawks today is that they don't understand this trade-off. They think if we cut government spending, we can somehow, get back to a growing economy without a deficit. And my contention is if you do that, you are going to either inflate a bubble in private sector assets, which is more dangerous than a bubble in public sector assets. deficits because they have hard budget constraints, right? They don't have the Fed and they don't have the ability to tax the American people and all that kind of stuff, right? So you're either going to do that or you're going to have a massive deflationary spiral. And I think what you're seeing in China right now is a massive deflationary spiral. It's on the order of what happened. So like if we do what Elon wants and we cut $2 trillion out of the deficit and we don't change the system, we are going to have a Great Depression, right? That is simply what's going to happen because there is not enough demand in the world to recover from that. And I think what we saw is like, hey, look, we go back and forth on these pendulums, right? Like we were all laissez-faire economics in late 1800s. And then look what happened. I mean, it was devastating. I mean, not just the Great Depression, there were multiple deflationary spirals before that, right? And so we had these huge downturns that were just horrific, like massive unemployment. I mean, things that you wouldn't even imagine today that we would not tolerate. And then we had this massive one in the Great Depression, which is exacerbated by multiple other things. But these deflationary spirals are super destructive, right? I mean, you had 25% unemployment, economy shrinking. I mean, there were people like riding around on trains to get, like hopping on trains illegally. We had hobos. We had like camps of homeless people all over the place that were actually middle-class people, not like fentanyl addicts. And like, we could not handle that at this point, right? So, and that's what, the Treasury Secretary under Herbert Hoover, when the Great Depression started, said, liquidate capital, liquidate labor, liquidate the banks, liquidate the farms, right? Because that's how we get back to productive, we get all the bad stuff out of the system. Well, that makes sense in a way, but it can create so much momentum in that direction that it just destroys unnecessarily. And that's what happened in the Depression. So yeah, we went from that laissez-faire to then Keynes coming in and being like, this is crazy. Why are we doing this? Like we're destroying people's lives here for some abstract, principle of laissez-faire, right? So he comes in with Keynesian economics, and then we go back to Milton Friedman. And now we've moved over back to the more Keynesian camp, which is now, I don't know, whatever, MMT, modern monetary theory is sort of the recent manifestation. And then now we're moving back toward what austerity type politics is sort of what the vibe is right now. I think that's not going to work. So I went down a long thing on that. But the reality is that we're now at a point.
Well, I wanted to clarify. So in this piece that you're talking about, that Napier wrote, like the Chinese are now we've had artificially low currency. They've had an artificially low currency, right? And so now what are they doing exactly? Or they're starting to do that is what he was talking about, to change that so that there might be, more of an equilibrium, which will set off this whole.
Yeah. So I guess what I'm talking about in this piece, and I've talked about in a couple others, is that we are really coming to the point where China has doubled down on its policy of exporting its surplus production. And now, it had this way overproduction of domestic infrastructure and housing, right? That produced all these bridges, trains to nowhere and ghost cities, right? And so now they've firmly said, we're not going to do that anymore. And we're going to deflate that sector. And then we're going to pump all the stimulus from that, all the stuff we were given to that over here to these advanced manufacturing sectors. So that's EVs, batteries, solar, robots, other stuff. It's all in China 2025, right? And so now they're doubling down instead of like readjusting their economy and saying, hey, why don't we produce stuff for our people and produce the right stuff instead of just a bunch of housing and infrastructure nobody needs anymore. They're saying, no, let's go make a bunch of stuff for everybody else in the world, which they were sort of already doing, but now they're doubling down on that to the point where anything they're investing in that creates so much overproduction, they just wipe out all industries. So I think like, EVs, car industry in Europe, without protection, it's done, right? Same here. I mean, the same thing would happen here. We put on 100% tariffs, right? So what we're seeing is really China has chosen this sort of like uber aggressive export driven beggar thy neighbor policy to try to get out of this deflation caused by deflating the bubble in housing and infrastructure. And it's just not sustainable, right? So the rest of the world would just have to give up all of its manufacturing capability as a result. And you're seeing it happen in Germany, right? This is what's killing Germany because they're trying to partner with China and China doesn't want to partner. They want to become Germany, right? So I'm seeing, you're seeing that's forcing this response. And I think Trump is well on his way to meeting this threat, right? And so we're going to start moving into this new system as if these developments continue, right? If China keeps exporting all this surplus production and Trump keeps on the track of dealing with it through a tariff regime, we are moving into the new system in a couple of years, right? It's going to happen no matter what. And I think it's going to be characterized by these two key factors. So the first one is going to be dealing with the debt, right? So I think we are going to have to go into a regime that's been, Napier calls financial repression. And it's something we've done before. We did it post World War II in the United States. And so what it is when you get a really high debt to GDP ratio, like 120% for us. Because we're not the private sector, we can do a bunch of other stuff. And so essentially what happens is the Treasury and the Fed usually have to work together. And basically what they have to do is hold the interest rate that they're paying on their debt below the rate of inflation. And so as that happens, you can bring down debt to GDP if you don't increase spend. Obviously, you can't keep increasing spending from the federal side. You have to cap that, right? But you don't have to drastically cut it. What you need to do is inflate away the debt that you're creating. And you do that by paying less interest than the inflation rate. So people say, well, why would anybody buy debt that is paying less than the inflation rate? You're losing money in real terms, right? So I would suggest don't do that. So don't buy Treasury debt right now. I'm not a financial advisor, but that would be my take. But the government has a lot of power, so they can force, like the Fed regulates banks. So they can say, hey, we think you're too risky. We need you to hold more Treasury bonds to make sure to meet your reserve requirement ratio, right, to make loans. So effectively, they can tell them, you've got to go buy Treasuries, even if they're below inflation. And so you saw what happened with this, right, with that Silicon Valley Bank thing, where they were buying these Treasury bonds all through, when rates were really low, and then they spike up, and all of a sudden that portfolio of bonds, the Treasury bonds, are no longer as valuable as they were, because you could buy a new bond at a higher rate, right? So if you got a 3% one, now you can buy a 5% one, you're going to lose whatever 40% of the value of the bond, right? So what does the Fed do? It goes in and says, oh, we're going to open this window so you can sell that back to us and we'll exchange it, or we'll stabilize you, or whatever. So that's what they're going to do, right? They're going to force the banks to buy this stuff. And then they're going to do all this stuff around it to make sure the banks stay solvent, right? So that's one thing. They can also do it with insurance companies. Napier's other times he's speculated that like 401ks, they could go in and say, hey, look, you've got to meet some basic tests at employer to, your retirement, what you offer in your 401ks. And like, that has to be a reasonable offering. Well, it can go in there and tweak the regs and say, you know what, we don't think this offering is safe enough or is responsible unless it has X percentage of treasuries in it. So all of a sudden, every 401k is buying into the treasury market through, they use target date funds or something like that say, oh, we'll give you a 80-20 split between equities and bonds when you're 25. And then we bring that down to 50-50 or 40-60 or whatever. So over time, you're buying more and more bonds. So this is the way, on one side, they can just force a bunch of people to buy this stuff, right? There's also the idea that this guy, Stephen Miran, came up with. He was a former Trump Treasury official. Scott Besson has sort of talked a little bit about something similar, but it would be like forcing other countries to buy our debt. And so we could say, hey, Germany, if you want military protection and you want free trade with the United States, you need to buy X amount of Treasury bonds every year, long-dated Treasury bonds. So, that's like a protection racket, right? It's like, hey, we won't let you get killed if you buy this, right? So, yeah, I think that's probably not going to work. Napier kind of poured a little cold water on it. I agree in the sense that, I think everybody else is in the same boat. So they are not going to be able to buy treasuries. They're going to have to deal with their own problems. Like, I don't think France has got to buy its own debt. I don't see them having a ton of capacity to buy ours. So I think like we can do that and turn them into complete vassal states dependent on the United States. I'm not sure they would really do it. But on the other hand, like, is that what we want to do? Do we want to like weaken every partner we have in the world, particularly when we're facing down China, like we're going to go do that to India? I don't think so, right? Or Japan. We need to strengthen them. Japan actually owns too much treasury debt already. So like, I don't see us doing that in the future. I think they'll buy some, but I don't think that's a solution. And I think the final part of financial repression will be, some version of quantitative easing that we did post great financial crisis can also turn, I think quantitative easing is like a light version of what's called yield curve control. And so the Fed can actually just go buy bonds off the market, right? Or from the government directly or off the market. They can do whatever they want. So basically what they do is they say, we're going to buy, this is what Japan's been doing for 20 years, 30 years, is that they can go in and just buy treasuries. So they can say, hey, if the 10-year yield on the treasury goes too high, goes above 5 or whatever their target is, we're going to buy it. And so that way they keep the price down. There's a buyer of last resort. Of course, so that seems easy, right? Let's just do that. I mean, I guess the problem becomes the market is no longer setting the price of debt. And so you're distorting the signals. I mean, the whole point of pricing is to tell people what to produce and not to produce and how much and when. That's the point of capitalism, right? And so if you go in there and intervene for decade after decade, like they have in Japan, I think you really distort your economy over time. So, and I think, Japan's been doing fine. I mean, it's not terrible. I think long-term, that would not be a great thing for the United States. But I do think, look, we did it from the 40s through the 50s and like everything was fine. So I think we could do it for some period of time. So I think it's a tool that we will use, but it's not like we don't want to permanently do this forever, right? So on that side, what you're going to have then also, I think, is the government, pairing that financial repression to inflate the debt, but it also needs to invest into domestic and ultimately, I think, multilateral production across our alliance network. So look, China produces 45% of all the manufactured goods in the world. That is a crap ton of stuff. So it was really shocking to me. I actually didn't know that it was that large. And Noah Smith did a good article called Trade is War or something like that outlined it. That brought it home to me that the policy should be America first, 100%. It's our country and we should do what we need to do for ourselves. But that made it really clear to me that there was no way we were going to be able to maintain a modern lifestyle and a modern industrial production plus military production without some kind of alliance network. If, as I believe we do need to decouple from China, we have to, because they're going to use that industrial production against us. We don't have to decouple all at once. We can decouple from the high-end stuff first and let them keep sending toilet paper or whatever. But like at some point, we're not going to be able to trade anywhere near the level. So I don't see the capacity within the United States to make up for all of that production. And particularly when we're not going to have high levels of immigration. So there's a lot we can do. I don't think we want all that stuff, right? We want high-end, stuff we can automate, use with higher skilled labor, stuff that secures our industrial base. Semiconductors, yes. But like making widgets, I don't know that we really want that. And so I think what we're going to have to do, we don't want to become China. I also take the view, and I'll probably write about this in the future, like some people are like, look, the whole world's aging. And when people get older, they buy less stuff. But what do? They buy more services. So they're more home healthcare workers. Maybe they travel more. Maybe they do more stuff for their kids or whatever, their grandkids. So like, I don't know if doubling down on making stuff is like the most profitable thing to do. Maybe part of the genius of the United States has been we're investing heavily into services, right? And even if you look at like medicine and biotech, right? These are huge growth areas in an aging world. So I think we have to come to some balance where we can't allow all industrial production to be taken as it clearly has been going, but we need to bring some of that back, and we need to bring the higher end stuff and the really security focused stuff back. But we're going to have to team with all these other people so that they can build stuff for us too. So if we just go and do our own thing and we bankrupt all these countries by forcing them to buy our treasuries and blah, blah, blah. I just don't think like that's going to be a happy world for the United States either in the long run. Right. So I don't think this policy of only America first is going to work.
I was going to say, he talks about we have to get to a certain level of manufacturing. Hopefully this would never happen. He says, say China declares war on us, right? And we have no capacity to manufacture anything, right? And neither to our allies. What do we do then? That's a doomsday scenario, right?
Right. So clearly we need to lead some sort of effort, multilateral effort to shift the trading and economic and production system, right? So that's going to be part of it. So while we're inflating away these debts, we still need to invest in domestic industrial production and in production in other countries. And, I think we're to do that through a variety of ways too, right? So I think probably the bills that you saw, like the IRA, the Inflation Reduction Act, the bipartisan infrastructure legislation, some of the others passed during the pandemic or right after, those were really direct industrial policy, right? Like we're going to build, or like the CHIPS Act, right? We're going to build semiconductor plants in the United States. I think the era of those big bills, maybe with the exception of something on AI or quantum coming up, those are probably, that era is probably over for right now. But there's a ton we can do that I would call industrial policy on the regulatory, tax, and trade side, right? So I kind of go in the article, like, I think one thing you're going to see is increasingly they're going to use the tax code as a way to get the industrial production that they want in the United States, right? So they're going to say, yeah, we go from any business that took out debt could write off the interest, deduct the interest as an expense, right? Then in the last tax cut in 2017, it was like, all right, we got to limit that to 30% of your profits, right? Or your adjusted gross income, whatever it was, the term for corporate one, not personal. And then, I could see in the future them saying, hey, look, you only get to deduct interest for things that were produced domestically or for that produce jobs in the United States or, blah, blah, blah. Think of design your program that you want, right? Or you get half the deduction if you don't do that, and you get the full deduction if you have domestic content or something like that. So I definitely see the tax code becoming a tool that the government uses, and they're going to take benefits away from companies that don't comply with that and give them to the companies that do. So that seems to me like kind of a no-brainer. I think regulatory wise, we're going into a new regime where we're really going to focus on deregulating to spur domestic production. So that's going to mean a lot of changes to environmental legislation. You're going to see that, I think, right away in the new Trump administration. And I don't think you're going to see a ton. You're going to have like some Democratic pushback on that. But I think like in the end, they're going to kind of agree with it too, because they can't build solar panels, solar facilities either, right? So I think that in the end, that will be sort of bipartisan with, some obviously fighting around the edges. And then, of course, you're going to see this tariff and, right. And then, of course, you're going to see tariffs and currency controls. And I think that's where I really wonder how quickly we're going to go into this. So I think if Trump is true to what he said on the campaign trail and in recent days, we will have a pretty broad-based tariff system very quickly. But there's a lot of people speculating that this is a negotiation tactic. He's not going to really do it. I don't know. I look at it from two different ways. One way, I'm like, hey, they need revenue to pay for tax cuts. So that makes me think, yes, maybe they will do it. But on the other hand, I think when they see the effects of tariffs, and if they're large and broad-based and destructive, I think people are going to freak out. So, and the economy might take a nosedive. So who knows? I think it's up to time will tell, and only Trump and his immediate circle really know what's going to happen. So we'll see. And I don't know the answer. So to me, that's what you're going to see, right? You're going to see this rise of financial repression. We're inflating away deficits. We're also probably going to have to cap the growth rate of Medicare and Social Security, because as they grow, they're not based on the interest rate, they're based on the inflation rate. So if they continue to grow at the inflation rate, that's not going to deflate away the debt because we're piling on more debt. So we are going to have to deal with that at some point. And the reality to me is that all of this comes down to, at some point, tax rates will have to rise, and entitlement programs, particularly Medicare and Social Security, the benefits will have to be capped to some extent. They'll have to be reduced to some extent. or just the growth rate of them need to be reduced for everyone. I mean, corporates, everyone. So the fact that we have an administration coming in saying that it's fiscally responsible and they're going to cut $4 trillion in taxes is ridiculous. And saying that we're going to balance it on the back of domestic discretionary spending, this is nuts. This is the only productive spending we do in our country. It's a spending that goes for education and research. There's stuff in there that everybody hates, and fine, you can argue about it. So you go try to cut veterans benefits, have fun with that. But it's the only stuff that actually benefits younger, productive people building roads and infrastructure and, education. So we're going to cut that and transfer even more money to old people and rich people. Give me a break. This is ridiculous. So the fact that you're coming in and saying, yeah, right, we're going to cut, the poor kids don't need to go to college, right? So I just find that frankly ridiculous. And saying that you're a fiscal conservative and then saying you're going to cut taxes and not touch Medicare and Social Security is a bunch of crap. That doesn't mean anything. You're not a fiscal conservative. Neither party can get it through their, look, the politics are what they are. Nobody wants to pay more taxes and nobody wants to cut their benefits. So until that gets resolved, we're going to run more deficit. And to get there, we are going to have a big crisis. So I don't know when that is, where, but the only thing we're going to be able to do in the meantime, and might help us if we do, so this financial repression will help us, right? But if we continue to not restrict the growth of Medicare and Social Security and continue to cut taxes, even financial repression won't be able to keep up because you're just piling more and more on the debt, right? So until those two things, so I think eventually there's some crisis in the system. I think we can hold it off for a pretty long time. So, that's the ultimate endpoint. But I think until then, we're going to do this. We're going to have interest rates below inflation rate. Don't save in bonds, right? And we're going to have this kind of state-directed investment program, whether that's through the tax code, the regulatory code, direct subsidies, all of those things. I think different mixes will come with different parties. And, Democrats are probably more direct subsidies. Republicans are more tax code, and maybe both agree on trade policy at some point. But that's what you're going to see. And then I think, like I kind of said, throwing in here at the end, eventually I think even that will collapse because no one's going to deal with the reality of raising taxes and cutting benefits. And to be honest, even I don't believe that we should do that quickly or severely. I think it has to be done because I think we would risk this deflationary spiral. I think what we need to do is gradually limit, you can do things like, hey, everybody under 50 is going to retire a year later, and then it goes up to another year and 10 more years, right? So I don't think we have to go crazy here. We just need some modest adjustments, but I see no political will for any of that. So it won't happen now.
Do that in France, but I think that could work here.
I think only after a crisis. So I think what that crisis will be, people are like, oh, well, treasury rates will spike. Well, the Fed's just going to come in and buy treasuries, right? So they're going to do yield curve control before they go into a crisis. So we have not exhausted, the government has not exhausted its toolkit for dealing with this. And it will before it allows a crisis to happen. And so maybe that makes it all the worse in the end, but I think that's the reality, right? So maybe somebody figures it out and has the political will to do something about it, but I see no sign of it right now. I see a bunch of people running around talking about cutting the Department of Education. It's a waste of time. What are they doing, right? Give me a break. It's not serious.
Yeah, there's a lot of that.
Even if you did it, it wouldn't solve your problem. And you're taking away what? Benefits for, you want fewer teachers? It's that's what we want? Give me a break. Come on.
To hear talk about the government being more involved, right, in Americans' lives. It's just an interesting turn, right? That I think a lot of people don't think about this idea, what we're talking about today.
Get your government hands off my Medicare is sort of my response to that. The government is all over your life already, right? So, and it's like I said in that piece on Doge, it's like everybody loves government, waste, fraud, and abuse, and all these things that the government does. And then you get into the actual real numbers of the real stuff, and nobody wants to cut that stuff. Nobody. Because it's teachers, it's vets, it's healthcare for old people who vote. It's income support for old people who vote. I mean, look, they're not going to do it. And to claim that you're somehow going to solve this problem without actually dealing with the revenue side and the largest growing part of government expenditure is just patently ridiculous. I mean, it's not serious.
So is it ignorance or just right out lying?
Yeah, it's willful ignorance, right? I mean, they know the facts, right? But they just know they can't win elections based on that. So they're going to make a bunch of noise about something else and try to keep treasury rates down. And unfortunately, I think they're going to do some damage to a lot of programs that are necessary that drive actual economic growth in the country in the meantime, right? Like, we do not need to be cutting medical research. Just like I said, we're going into a time of, where all of the world is aging. Healthcare becomes more and more important. So it's a bigger and bigger share of what people are going to spend money on. We're right in the middle of it, right? So why would we cut our golden goose that produces? And just like I said, look, there are plenty of reforms. I'm not saying that we shouldn't go in and reform things, right? Like, I think the NIH should be funding riskier stuff. There's also a huge problem there where, like, each institute is divided by body part, right? There's like the kidney institute or by disease, right? Versus like, hey, we have these big cross-cutting problems that cut across all different diseases and body parts, right?
So you're like the liver institute, the kidney institute, diseases associated.
Right. No, it's more like cancer and others, right? Cancer is the largest one, and diabetes and things. So it's more disease, not body part. But there are these cross-cutting things that go across all these diseases that you could, so you dealt with obesity, you could deal with 8 of those issues, right? But we fund it this way. So we fund existing people who have the most power rather than new, more innovative ideas. We fund by disease rather than cross-cutting, blah, blah, blah. I would say, yes, let's go in there. And I hope Bhattacharya goes in there. He's awesome. And hopefully that's what he'll focus on instead of like, hey, let's stop vaccines, like stop that crap. But look, we need vaccines, please. And so I would see reform makes a lot of sense to me. Saying that we're going to go cut a bunch of spending, that's crazy. That's like saying, I'm a hyperscaler in AI. And you know what I'm going to do? I'm going to get rid of all the spending on AI, right? Like, that's insane. Don't do that, right? Your stock price is going to go, right? So the government cannot do that. And unfortunately, I think we'll do some of it.
You're not making the decisions. You're just calling them like you see them.
That's right. Yeah, I say to everybody, until you see someone say tax rates are going up and the fastest growing parts of the government budget, namely Social Security, Medicare, to some extent Medicaid, but more Medicare, we're going to reduce the growth rate of those or limit benefits in some way. You're not serious. There's just no way you're balancing any budget with that. And deficits are going to continue. And that's going to result in more financial repression until the system breaks, right? So I think I almost did a whole nother post here beyond just talking about national capitalism. Yeah, I mean, I think national capitalism is a response to the breakdown of the world order. And so we're going to have to subsidize production and inflate and support debts, right? But in the long run, it cannot solve the problem. There are limits to national capitalism. And I think what I'm talking about, first saying it can't be only national, right? Because we need our allies to produce too. And that means we need them to have healthy economies. And we learned this during the Cold War. We did not win the Cold War by bankrupting our allies. We did it by strengthening them, right? And then we did it with our not ally, China. But we have to take that playbook and say, we need Germany, we need Canada. And to be honest, we need Japan. We don't need Germany that much. We need Japan, we need India, we need Australia, we need the Philippines. We need to cut deals with these guys to keep them strong, right? And we need them to produce as well as us, because only together can we outproduce China. I'm sorry, we're not making up that 45% of production with, a labor force that's going like this, right? So, of course we can automate, of course we can do all that stuff, but there's a limit to that, right? So I think there's a limit to this national capitalism. And then I think the long-term limit is this budget crunch that comes from, remind everybody, the revenue side, because we're cutting freaking taxes during huge deficits and booming economic times. and the spending side, which is largely entitlements for old people. Those are the two. Until those two things are dealt with, we will not have a complete new system that is sustainable going forward. And actually, I'll write another piece on that, which we won't go on the podcast about because I already did. But I do think it's really important that people get in their heads what is a serious proposal. It might be good stuff. I mean, tax cuts and stuff, that'll juice things for a little while, and we certainly have more debt capacity, right? I mean, I think everybody needs dollars, so no one's rejecting dollars right now. It's just the point is like, we're not helping the long-term problem. We're just living more.
No, we're perpetuating it.
Yeah, we're perpetuating. But I want to be clear. I don't think there's any crisis. There's no crisis coming anytime soon. I think that's ridiculous. I think people saying that have no understanding of the resources of the federal government. It is vast and powerful. And I do think that eventually other countries, us, will figure all this stuff out. And I think particularly on the national system meant to decouple from China, I think you're going to see that's already shifted. I mean, if you could read books in 2017 about talking about China, it was still so tentative, like our separation from them. Now it's like everybody knows. And so like, think about it. In another 5 years, I mean, this is going to be fait accompli. So things have changed and shifted so much already. And, I think that soon we're going to realize the limits of national capitalism. We are going to have to work with other countries, right? So it won't just be only America. And then I think, the other dangerous thing actually is when China figures out their model is going to collapse. Because once we cut them off and once we're on that road and we get an alliance network of other people, there are no more buyers out there, right?
Right. So when you say cut them off, you mean once we stop buying all their crap.
Right. And that means they won't buy treasuries, right? So we've got to deal with that. So part of that's going to be financial repression, yield curve control, working with our allies, all that stuff, right? But it is going to be a problem. And I think there's going to be some instability there that the government's going to have to deal with. But I don't think it's fatal at any time in the near future or in the midterm.
Oof, well, that's a relief.
Yeah, I think we're fine. But I think China's pretty much effed, right? I mean, you think about it, it's like if we create an alliance network of the 4 or 5 major economies beyond China. Now, I think India is probably not quite on board, but say everybody but India, Russia, give me a break. Well, there are probably only 130 million people there now, and they're all dying. The birth rate is like one of the worst in the world, and like they have no money left, right? I mean, they have natural resources, sure, but there are no set of buyers out there. India is still vastly impoverished country, very low GDP. So I just don't see the realistic idea somehow that China is going to be able to move production, export all their stuff to other people. Then add to the fact that, these other countries want to grow too. And China's just focused simply on shoving their exports down the throats of all the developing world. I don't see that as viable either. So in the end, the real worry is that China figures out that they're doomed. And I think that could happen in the next couple of years. And then I think we enter a really dangerous time. Because for China, if they really figure out that the game is up, then I think the invasion of Taiwan becomes a serious possibility for Xi. I think they have nothing to lose. And I think this is something I've just started thinking more deeply about. And I want to read some more and look at more experts on this and really understand. Because it is frightening to me that it's going to become clear to Xi very quickly, I think within a couple of years, that the game is up. And once that happens, all bets are off. So on that cheery note, I think we are done for the day. Just remember, don't buy treasuries. It's a terrible idea. Don't buy treasuries. China's screwed. We're going to have increasing amounts of government involvement in the private sector, and that will come through some direct subsidies, but a lot of tax policy that's going to be focused on domestic production, domestic employment. We're going to have that in regulatory policy, and that there's a limit, I think, to the America first only policy. We are going to have to work with the rest of the world. And I think we will realize that as Xi is realizing that China's screwed. So hopefully those two things come together. And I'm not so sure that, well, I don't know. I say hopefully. I don't know if one really helps the other. I think actually the more that we unite the rest of the world, the more that China sees it's screwed. So I think we've got to need to do some more thinking and reading on that and try to figure out how would that really play out, because it is a really scary possibility. And like, what could we do to stop it? I don't know. I don't know if there's much we can do to stop it. So that will be for a future newsletter pod. I don't know. No, next week we're doing energy. We're going to take a little tour of 4 major countries on energy and whether the green dream is dead or just postponed. So until that.
You've been listening to The New Rules with Alan Pence. For more insights on mastering the new game, follow @apence, that's APENTZ, on X, and make sure to subscribe to the podcast so you don't miss a single episode. Thanks for tuning in, and remember, in today's world, you don't follow the rules, you write them.